Hello there, BoBo the Bitcoiner is back. Another year is gone, and now it's Chinese New Year. Wish everyone a happy Bitcoiner year. And Bitcoin is now 14 years old. Okay. So let's talk about Bitcoin and how it is different from the rest of the crypto asset in the market. Initially, the word crypto asset is strictly meant for Bitcoin. When Bitcoin started that way, of course, nothing else. All right. However, the sector has experienced a massive expansion by creating thousands of alternative crypto assets and tokens over the last decade. And while all the activity was meant possibly by Bitcoin groundbreaking blockchain, use of blockchain technology, the reality is the intended utility of Bitcoin is quite different from the rest of the other crypto asset case. Bitcoin has an intended use case as a new global, digital, decentralized, permissionless, non-custodial, and apolitical monetary and financial system that rewards and protects savers much more than the current central banking system. But the rest of the crypto assets mostly involve riskier, more speculative use cases that may not stand the test of time and often reintroduce many of the problems that Bitcoin intended to solve in the first place, particularly regarding the issue around trust and counterparty risk. The underlying point of Bitcoin is to move away from the central banking and towards a Bitcoin standard, which would have involved restructuring the economy with a greater emphasis on saving and less speculation and outright gambling in the financial market. To put it bluntly, most of the rest of the crypto assets in the market is in direct contrast to Bitcoin. It operates more like a casino than innovative financial phenomenon. This contrasting philosophy illustrates why it makes sense to differentiate Bitcoin from the rest of the crypto asset market. You know, Bitcoin creator Satoshi Nakamoto wrote this a month after Bitcoin was launched. And this is what he said. The root problem with traditional currency is all the trust that required to make it work. The root problem, trust. The central bank must be trusted not to debase the currency, but history of fiat currency is full of such breaches of trust, right? Bank must be trusted to hold our money and transfer it electronically, but they land out in waves of credit bubbles with barely a fraction of reserve in their own account. Now, these are the exact words of Satoshi Nakamoto. Bitcoin is an alternative to the current standard of inflationary government-issued currencies and centralized banking institutions. due to its deflationary monetary policy, Bitcoins allow users to store their savings in money intended to appreciate over the long term as the economy grows. But under the inflationary regime, saving disincentivized through the currency depreciation over time. Since they don't want to watch their savings lose value over time, users of inflationary currency are effectively nudged into investment which that offer potential returns, but also with added risk. Under the Bitcoin standard, people can theoretically hold Bitcoin and not have to worry about the policies of central bank or make the correct investment to combat inflation. Before Bitcoin, this one role of non-inflationary money was mainly played by gold, right? However, gold was also a drawback and is not well suited for the internet age. Example, using gold for online payment requires the introduction of centralized custodian to process the transaction, which leads to many of the aforementioned banking-related issues. Additionally, Bitcoin can be securely stored in ways that gold cannot via methods such as multi-signatory addresses and brain wallet. That's why Bitcoin has long been regarded or referred to as digital gold or gold 2.0. Of course, Bitcoin has not yet achieved this goal of becoming gold standard for saving in the digital age. For now, it is still generally viewed as a risk-on asset, as illustrated by its recent price rise on the news of slowing inflation. That said, as Bitcoin continues to grow and exist, it should become better understood by the market, less volatile, and a better form of saving. The vast majority of crypto market amounts to not much more than gambling on variation of the Ponzi games. Everything about Bitcoin is focused on limiting the risk, while nearly everything else in the other crypto asset is focused on increasing the risk and attracting more entrants into the casino. Let's look at the sort of activities on the other crypto space. Right. The biggest use case of Ethereum network fell into four categories: non-fungible token NFT, stablecoin, decentralized exchanges, and widely criticized crypto token built around cults of personalities such as Zen and Hex. All these use cases operate in the realm of speculation rather than money or saving, which is Bitcoin's intended use case. There's also nothing to stop an issuer from diluting the value of the particular NFT by creating and selling more tokens, similar to inflation of the currency. Like NFT, popular stablecoin of today, also have centralized issuer, so that they too are vastly different from Bitcoin in that they require trust in the third party. Very similar to the traditional banking system. Although the assets themselves are less speculative due to their due to their stablecoin nature. They play a role of chips in the crypto casino. Decentralized exchanges are mostly used for trades involving the aforementioned stablecoin. If the stablecoin is removed from the equation, decentralized exchanges are mostly just casino or Ponzi games, some of which could not get listed in the traditional centralized exchange even. This decentralized exchange and other decentralized finance DeFi application also often have their proprietary token, which can be used to speculate on the potential success of a DeFi application. Now, looking at these four use cases, it's clear they are not only different for Bitcoin, but in many cases operate on the complete opposite end of the risk appetite spectrum. Crypto may persist as an avenue for online gambling and get rich quick scheme for some time, as plenty of people are interested in that sort of thing anyway. Either way, it makes sense to differentiate Bitcoin as a saving technology from the rest of the crypto asset market. And here we are talking about comparing Ethereum, which is the second biggest crypto asset in the market, with Bitcoin, and there are already far differences. All right, the major thing is risk appetite. Well, if you talk about the rest of the crypto asset other excuse me, other than the Ethereum, no need to compare anymore. They are far worse. All right, and there is definitely higher risk, higher Ponzi scheme, higher casino game to play. This is not what Bitcoin intended. Bitcoin was invented mainly, purely for a saving and to so that the value appreciate over time. All right, not something you can speculate on, risk at taking on, and hope that you will appreciate from those gambling. So remember, Bitcoin is a saving that will appreciate over time because of its deflationary status. Okay, trust. This is something to think about. Hope you enjoyed it. See you next time. Bye bye.